Hey folks, welcome back to the channel. It's Liquid here, and we just saw something that doesn't usually happen in the stock market, which is the index going up 8 days in a row, increasing by more than 1% per day on average. It's obvious people are very optimistic about the market. Just a couple weeks ago, we got news that leveraged long ETFs, which you would buy if you're super bullish, received over $6 billion in inflows. Look at the size of that bar compared to all the weeks over the previous couple years. But the thing is, the market is operated by both bulls and bears, and one can't make money without the other. Right now, over the last about 2 weeks, the bears have been mostly sitting on the sidelines, and we've seen obviously a lot of buying pressure as the stock market heads up. But the market can't go up forever, and I think we might be at an inflection point, at least in the short term, because the S&P 500 has been in this downward channel for most of the year so far. A lot of people got super bullish right here when it broke out of the channel for the first time towards the upside. But like I mentioned in a previous video, I'm still not quite bullish yet, because this move over here that we've seen in the last week could be just an overcompensation to mirror the previous overcompensation on the opposite side. So unless this can continue going up, I would not be medium-term bullish just yet. Now, the reason I think it's very likely we're going to get some kind of pullback over the next week is because there are probably a lot of bears waiting to come back into the market, but they didn't have the right opportunity over the last 8 days because the price has been just going up. But the interesting thing is that as the price goes up, and the bulls buy more and more, eventually they're going to stop buying because either they've maxed out their positions or they're just simply out of money. And when that happens, there will be less upward pressure on the price to go higher as the buying volume slowly dries up. And that's when sellers come in and can potentially send the price back down. And 5,600, where the S&P 500 is at right now, seems like a likely price for bears to come back into the market. At first slowly, and then more and more sellers will pile in and drive the price lower. The first advantage that the bears have right now is historical data. If you look at the last 100 years of the market index, there has been 8 other times where you have the S&P 500 go up 8 days in a row while it's below the 200-day moving average. Out of the 8 previous times this has happened, the market was down the next day 5 out of 8 times. And compared to the price of the market 2 days later, it has never gone higher, with a 0% positive change in all the 8 samples that we've seen in the past. And even 1 week and 2 weeks later, the historical data does not show very well for this type of scenario, where the market was only up a quarter of the time after a week and about a third of the time after 2 weeks. And even looking at the 1 week later statistic, assuming this time is going to be one of the better weeks where there was a positive change, it's only just a small increase of less than 1%. In both of these cases where the market did turn out to be positive. So even then, it's not great. Historical data aside, looking at the technicals, we can also see reasons why this 5,600 level is an area of resistance. If I turn on the exponential moving averages, so now this black line is the 200 EMA, and you can see the price today on Thursday, it shot up above the 200 EMA, but ultimately ended the day not only below the EMA, but it was a very strong rejection because it closed the day lower than it opened. And that's why the color of this candle is red, despite it actually being a positive day. So when you see a red candle that closed higher than the previous day, it's very common that this is a reversal candle. And here's another reason. If we measure the distance using a Fibonacci retracement from the top of the cycle all the way to the bottom back in April, where there was panicked, if you remember that, you can see that this teal line here is the 618 fib line, which is a very common area of resistance where the price gets rejected and goes the other way. And that works in both directions. So if I do a fib retracement, let's say from the bottom of the swing move to the top over here, let's say today is April 21st, so this red candle here, we could say that from the bottom of this swing low to the top where it got rejected, came back down, it looks like this could be an area of support because once again, it's at the 618 level, except this time it's just in reverse of what I showed. And then finally, I'm seeing a hidden divergence here. So we have this trend that's going down initially, making lower highs. You can see from last month to now, the market has made a lower high, but on the RSI, we can see there is a higher high. Same thing on the MACD, we also have a higher high. And because the direction of the lines are going in opposite one another, and this is during a downward movement, this is a hidden divergence, and very commonly hidden divergences lead to a continuation of the trend, which in this case is continuing down this bear channel. So that's from a technical perspective. Now, fundamentally, you can also make an argument that this is likely a temporary top right here, because if you look at the news over the last couple of weeks, there hasn't really been any progress with the tariffs and trade talks, and the market has just been brushing it off as not a big deal. But even Apple came out today and warned about the tariffs, and maybe that's why, even though they had strong earnings, their shares are actually falling in after-hours trading. They beat on earnings and revenue, which is good, and as an investor, you would expect the price to go up, but it actually went down when the earnings released. Same thing with Amazon. If we take a look at this stock, very volatile after hours, right when the earnings came out. So even though Amazon stock is up 3% during regular trading hours, maybe because a lot of people had high expectations, and they weren't wrong. If we look at earnings, Amazon beat the estimated profit target by 16%, and the revenue is also slightly higher than expected. But the stock price instantly dropped 5%. So it basically wiped out all of the gains it made during the morning and afternoon. And even smaller companies like Reddit, which had amazing financials to report today and after hours, they were expected to make 2 cents per share, but they made 13 cents, which is over 600% more than what people thought. So very good. Also, revenue beat as well by a decent amount. But look what happened to the share price. First, it went up, but just an hour after that, the price crashed right back down and went to basically the closing price before doing a little bit of a bounce and then kind of just consolidating here back to the price of the stock at the beginning of the day, around 125. So when you have companies that modestly beat earnings, but their stock price still went down, and then you have companies that absolutely crushed their earnings with better finances that anyone could have predicted, and their stock price at the end of the day is basically unchanged, that kind of tells you that maybe this enthusiasm in the market that we've seen is starting to die down. Plus, the economic data we've been getting so far aren't that good. Like, it doesn't substantiate an 8% increase in the stock market. We had ADP employment data yesterday. It was expected to be 120,000, but it was only actually just half of that. And not only that, but it's way less than what it was in the previous month. Furthermore, GDP was expected to be 0.4, and we got a negative GDP for the first time in years. So this is not a good sign either. And then today we had initial jobless claims this morning, expecting 225,000, but instead more people, 241,000, claimed they didn't have jobs, which is not only more than the expected number for this month, but also more than last month. So the data is bad and the trend is looking bad too. Now tomorrow we get non-farm payroll numbers, so we'll see how that goes in the morning. But again, fundamentally, the data we've been getting recently is telling us that the economy is not doing as well as people think it is. Yet we have this 8% move in the stock market. Now you could argue this is because of strong earnings, but we did see today how even though companies had strong earnings, their stock movement did not reflect their recent financial performance. So that's a sign to me that maybe the buyers are losing steam, which will create an opportunity, again, for sellers to come in. So that's why I think there's a high likelihood we're going to pull back from this point. Not for like months or anything, but at least a few days, maybe a week. That is the most likely scenario. And we could see the market come down, fill this gap that it made today. And the next target on the low side would be around 45.50, because that is where this upward trend line sits. And it also coincides with the shorter term 9 and 21 EMA, the green and blue lines, respectively. Once it reaches this line and continues down, then the next logical support area would be the top of this blue channel. Now, if the bears don't show up, despite all the reasons I mentioned in this video, and the price continues to go up tomorrow, which is possible, then that means most likely it will close the day above the black 200 moving average. And that would be very bullish. I think if that was the case, then we're going back to 5,800. Because if the bears are not coming in here, then I don't see any reason why they would come into the market before it reaches the next resistance target, which is up here at 5,800. Because previously it was support and then it acted as resistance. But my base case is that tomorrow and early next week, we're most likely going to see the market go down. So as long as the price remains below the 200 EMA, I am bearish, but if it closes above, then I would expect higher prices. So that's it for now. Thanks a lot for watching. I'll make an update on my gold SPY trade next week and see how that's going. Have a great weekend, and until next time.